Buy or sell Australian dollar / the US dollar. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. Okay, so we go here and look at this pair. We do see 1.9% from the 52-week low, but minus 11% pullback, which is significantly big. So this is the big picture, weekly data points, and I did find these time cycles: rise, decline, rise, decline, rise, decline, rise, decline. We are still part of this declining phase, but you can see here that the current time cycle, let's draw it in. So this time cycle price action is quite different than this, and this. I think that if we were to draw it in, the current time cycle is most similar to what we had back here, where you have this rise, decline, and then rise, decline. Here we have this rise, decline, rise, decline. So there is the potentiality of more decline because this one bottomed significantly below this minor time cycle pullback. So that's the risk. But let's zoom in, because this is very big picture though. So looking here at the big picture, we do have this interesting situation here with the moving average though. The red 200-week moving average, resistance, resistance. So it can become a very solid resistance level. It can also be support. There's no doubt about that, but the current situation is that we were rejected at that moving average. So this increases the probability that we will see this more major declining phase. If we go here to the daily data points, then we do have a situation where there is the potentiality of horizontal support. So if the bulls are going to stage a rescue mission, they have to do it like now. This could become support, but equally, it can become very strong resistance. We could draw in a head and shoulders pattern quite clearly here. Left shoulder, a big fat head, and a right shoulder. So this is a very interesting situation. Full-blown war between the bulls and the bears is in development. Okay. Looking here at the other indicators, we did pull back to a relatively low level on the RSI. Here, if we go here to the daily data points, we were extremely oversold when we had this mean reversion rally. And the question is whether this bounce was just a bounce, a dead cat bounce as it's called, within, a major downtrend. So the picture here is a bit ominous. For the Aussie. Looking here at the seasonality, then January is a strong month along with December. Over the last 10 years, January and February are not like really strong, but there's some fight in them. But over the last 20 years, and then we do see that January is a mediocre month. It closes higher 45% of the time, with a minus 0.2% pullback. And that is, meaningful in the Forex market, where we don't expect these huge percentage moves. But because of the leverage you can get on the trading platforms, you can get very big moves in your account. The issue for the bears is that February is very strong. It is the strongest of all months. But that is still some time ahead. And if the bears are able to just hold on to resistance at the 200-week moving average and break down the daily data points, the support level as well, the horizontal support, which would complete it would set the head and shoulders pattern in motion, then you might get a rally in February, but that could just be like a bullish mean reversion rally within a primary downtrend, which is also helped by the major time cycle. Looking at correlations, 60 9% long-term with the S&P 500, 69% with Bitcoin, 40% with gold, and minus 93% with the dollar index. But it is not perfect, so some would expect there to be like a minus 99% in this pair, but there's not. Looking short-term, minus 69 with S&P 500, minus 39 with Bitcoin, 67% positive with gold, and minus 85% with the dollar index. So the question here is, which currency will be stronger than the other? I think that as far as making a very bearish case for the Aussie dollar vis-a-vis, the US dollar, is that Australia, they are being very, very ferocious when it comes to the virus. Yeah, they are very ferocious, and I think that there's a huge risk. There's a huge risk of social unrest in that country, because when it comes to any kind of government policy, there's a balance. You don't want to be too soft, but you don't want to be too harsh either, and that goes with everything from taxation to how you respond to a contagion, you name it. It's all about the balance, and I think that the Australian government, they have really pushed it far in the they have been very aggressive when it comes to it. And when you look at the history of Australia, it was a country that prior criminals would be sent to. So you could start to argue that there might, if there's ever was a people where you have to be extra careful in terms of the potential for social unrest, it would definitively be the population of the people who live in Australia. So yeah, I think so. So in terms of, I think that is like one of those factors that will obviously have a big impact on the currency. That's social unrest. So yeah, I feel more bearish than bullish on the Aussie vis-a-vis the US dollar.